Welcome our market master for the morning, Rajat Rajgarhia, the Managing Director, Instl Equities at Motilal Oswal Securities. Rajat, we want to ask you a lot about your Make in India conference, but before that, at the end of the results season, are you still enthused to continue buying stocks?
Well, I must admit, this result season is one of those rare ones where we have seen a very high number of big misses in the big stocks right from the beginning till the end. Almost every day has been some kind of a negative surprises. While at the aggregate level we may have estimated about 4-5% growth, I think we are now preparing with maybe a 3 to 5% decline in the estimates for this quarter. Somewhere the whole downgrade cycle, which had stabilized in the June and the September quarter, has just taken a big leg down in the December quarter. We are quite surprised by the extent of decline that we are seeing in companies across the board. But yes, the markets are right now focusing a lot on macro, stock specific. Even like you mentioned about BHEL, even if the stock is down today 5%, it was up 5% yesterday. So it just kind of negated that up move. I think right now the markets looks to be little disconnected from the way the result season have panned out. But markets have their own wisdom. They probably focus more on future and not so much on what got reported.
Rajat, thank you very much for those very useful numbers. But let me just revise. You were expecting at the start of the earnings season a 4 to 5% rise in sales. But what you have noted so far is a 3 to 5% decline in sales. Is that right?
I'm talking about the profits.
Sorry, earnings. Okay. Well, what does this do to your future analysis, your extrapolation? Are you pushing back the quarter in which you will see earnings starting to improve?
Well, yes, because this year at least looked like that a 10 to 11% kind of an earnings growth at the aggregate level should have been done. But it looks like that 10 to 11% may get scaled down to now just at about 5% also. And if March quarter does not show any improvement over the December quarter, then we should brace for some more setbacks into the March quarter numbers. One of the important point is that while the domestic earnings continues to be very weak, the export businesses were driving up the estimates. Now, because the currency has stopped becoming a tailwind and many of the global prices have been under pressure, even those earnings have seen downgrades for them. So I think which quarter we are going to see the recovery, I can't pinpoint, but I think we are not going to see recovery at least for another 2 quarters in the estimates.
Rajat, thank you for those very enlightening numbers. So FY15 earnings could actually be in single digits at around the 5% mark. Would you change your assessment of FY16 then? Because earlier the market was expecting an earnings growth of 15%, 16% in FY16. Would you scale that down now? And if yes, to how much?
Well, I think what is more important is that even if the earnings growth for FY16 may not see any meaningful downgrade, that number still may be above 15%. The base number itself is changing. So if earlier you were expecting a 15% growth on 100, that number would have been 115. But now if you are expecting a 15% growth on 90, then that number becomes 105. So the absolute EPS for FY16 itself will see a downgrade. But let me admit that given that we are into such a volatile business environment both globally and locally, right? 15% plus estimate is what you will see consensus building on. But a lot of those earnings growth would still be centered for the second half. The first half would be about 10%, sub 10%, and the second half would be maybe a 20% kind of a growth.
Okay. Rajat, let's talk about your conference a bit. You have some interesting officials from the Maharashtra state government as well. what have you gleaned so far? Are the states prepared for a Make in India's ambience? Because it's a plethora of permissions that in the first place actually put off manufacturing and manufacturers from India. India became a service-oriented country, partly or almost entirely because of this maze of restrictions from the state governments and because of poor infrastructure. So far, what have you gleaned and what are you trying to glean in your conference?
Well, there are two very important data that we look at. If you look at India's share of industry in the overall GDP, for almost last 2 decades, that number has now remained stagnant at about 15%, gradually been coming down as services have grown also. And secondly, India's share of manufacturing as a percentage of GDP is one of the lowest amongst many comparable nations. So we may not compare ourselves with China, which stands at about 35% plus, but even compared to many other countries, we stand quite low. And that is a result of many things. I think over the last many years, the ease of, a very common term that's being used is the ease of doing business. But I think there have been many setbacks which have crept into the businesses at all levels, right from the center to the state to the funding mechanism, and maybe the way the businesses conceptualize the IRR in many of the projects. These things over the last 3, 4, 5 years has taken a significant knockdown. The amount of money that we have seen Indian corporates spending outside in buying businesses or building businesses has been very serious. So I think this whole theme of Make in India now is basically to instill that confidence back into various segments, that if the target market for the rest of the world is to sell in India, then why not begin by the concept of Make in India, so that the whole process of doing business becomes easy. And as you rightly mentioned, that states play the most important role, because that is where businesses ultimately get set up. That is the reason why today in the conference we have people from the state machinery also, or some of the experts who have worked in different capacities at various state levels, who will come and explain that what will it take to make this Make in India a very powerful theme over the next 1 decade to come.
Rajat, so far with respect to noises around or voices around Make in India, we've only heard of developments around defense. Which are the other sectors where Make in India can contribute meaningfully?
Well, I think almost every space that today we are importing or our future demand is going to shot up is something that can become an attention. I think one of the biggest sectors that India can make itself as the global hub across the world is auto and automobiles, because that is one where the competency of low cost manufacturing is very, very high for us. Defense, anyways you mentioned, is just about beginning to start. This could well be a massive opportunity over the next 1 decade. I think railways is another where we will start seeing significant investments now coming up. Nuclear, power, electronics, as I mentioned, our share is so low right now, right? And as a country with 1.3 billion people with rising per capita, our consumption levels are going to rise significantly. In the first leg, we have to see that how do we reduce the dependence of imports for a lot of the consumption that we are doing. And in the second level, we have to start looking at boosting our exports, so that we are truly able to utilize the low-cost, high-skill competency which lies in this country.
So, are you betting on any stocks at this point in time on this theme?
Well, this theme is going to present, Lata, stocks opportunities across the sectors, right from capital goods to financing companies to equipment manufacturers, logistics, almost everyone. I don't think this story is just about a particular stock. This story is about re-rating the entire domestic space of the country. Everything relating to investment cycle, to industrials, to people who finance them and be in the supply chain management should be big beneficiary of this theme over the next many years to come.
So one final question from my end. How much do you think Make in India can contribute to the GDP and by when?
I wish I can give you that number, but let me at least give you the direction that at 13-14% share of manufacturing right now in the overall country, right? This number can definitely double up, over the next 1 decade. And please keep in mind that the services continues to grow at a high single digit. So we are talking about growing our manufacturing over the next 1 decade in double digit. Unless we set targets for numbers like those, I don't think Make in India kind of themes will become successful. We have to target numbers where manufacturing grows faster than services.
Yeah, actually, Rajat, the CSO has achieved what the government has not achieved. The new GDP number actually gives manufacturing 21%. But jokes apart, I just wanted to end where we began. What is your earnings growth now for this year and next year?
Lata, we have not yet frozen, because as you know, today there are going to be very large set of index companies today and tomorrow both. So almost 1/3 of the Sensex companies are yet to report between today and tomorrow. Once we get those numbers on Monday, we will finally make our number. But as I mentioned, that number should at least see a downgrade of anything between 3 to 4% for this year.
Thanks a lot for joining us.